Good morning, Fed rate morning. The 10th of December, 2025. Welcome to Risk Neutral Trading. This is my virtual trading journal, which I share openly. I'm not, certified, licensed, qualified, whatever, to give financial or trade advice. And there's no intention of that, but I trade live. I am completely transparent about what I'm thinking, what my signals are, and when I'm doing it, because it's my virtual trading journal, which I share openly. So, boy, oh boy, it's Fed rate day. If you don't know that, then you best relocate from under whatever rock you've been living in under. And let's get on with the all-important numbers. Wait a minute, what am I doing? There we go. All-important reports. So my news sources I use two. This is investing.com. The other is Financial Juice. They are both free. You can certainly pay for them if you choose. I do not, because I'm trying to keep this stream and everything that happens here normal, within reach of anybody. These guys that come on and trade, and they're trading 10 minis with have a 20 tick stop or something like that. I don't think that's exactly normal account size and risk and all those kind of things. And that's not what's happening here at all. This is a real live trading account. This is my live AMP futures trading account funded by me, 5,000 US dollars risk. I mean, that's the account size. So that's, strictly transparent. Investing.com. I prefer this one because I like the format to screen snap and post somewhere, Discord or wherever. You can filter it for whatever country you're from, time zone, what reports you want. Do you want 1, 2, or 3 stars, et cetera, et cetera, et cetera. It's also got some other nice features because you can check out holidays. You can see what the earnings coming up. You can look at the economic calendar for next week. You can do many things. But the thing you need to do today is pay attention right here. That is the biggie of all biggies. Now, most brokers, if you're trading a live account, the CME raises the margin requirement for a few reports, in anticipation of a few reports. So if you are trading a live account, in my case AMP, the margin requirement went to 25% at 1,700 last night, and will stay that way until after the report, and they'll send out an email that will lower the margins back down. So if you don't have, let me see if I can get that. I should have had that queued up, sorry. It's $525 instead of in the case of the micros. Instead of 40, it's $525 per contract, per micro contract, or 575. Call it 600 to be safe. If you don't have $1,200, you can't trade 2 contracts. You get a margin call. So I'll show you that stuff in due course here. Anyway, that's what we got going on today. That's all eyes are focused there. The other report or service that I use is Financial Juice. Pretty much similar over here in terms of the docket. The one thing that Financial Juice does differently than in investing.com is, for example, if Trump is they schedule a press conference or something's going to happen, that will show up over here. And that's really important today in this current trading environment, because there is a real danger of unrecognized critical risk. So it's good that they try to show those things. Investing.com does not. It only schedules known forecast, pre-scheduled, standard, normal, non-farm payroll, PMI, S&P, Chicago, Michigan numbers, everything we're used to. Again, Financial Juice is free. You can filter it, whatever. So there we go. Let's zoom right on now to the pre-market. Well, here is yesterday. What is that? Balance. Here's today. Now, this is about as balanced, maybe not as perfectly shaped Gaussian distribution as you might expect. There's a little less taper at the top, which I pointed out yesterday over here in the RTH. But here's our open. And what our inventory is, in my view, it's essentially 100% balanced. We traded her up, we traded her down, we traded back here, a little bit down here, up there. I'm expecting no real, just an open auction. And they're going to just keep this going. And of course, they're going to start to, make a big batch of retail soup. Because retail traders cannot refrain from picking the top, picking the bottom, boy, I'm going to get along, and so the higher time frame is just going to chop them up and make money, waiting for the Fed announcement, and then all hands on deck, and that's when the serious stuff's going to happen. My opinion only. IRT, Investor RT by Linsoft is my charting. This is yesterday's RTH. Here's tonight. Here's this current ETH, electronic trading hours. This is the micro ES, the micro NQ, micro ES higher time frame or micro composite chart, and this is the ES mini market profile. I don't change it because it doesn't vary a lot. Extremely light volume again, 131,000 contracts, 138 on the micros all night since 1700 last night. If you don't believe me, let's look right over here. The average true range at this moment is 3 ticks. The volume discrepancy is 57. We're trading 50% of average volume, 58% of average volume for this time of day. Now, I also plot and track and push the minis, same exact configuration. Let's get back to the micros here. This is my higher time frame chart. It is real simple. Everything I do is simple, logical, based on data, price action data, and probabilities. Try to, anyway. And another thing that let me point out, on all of my charts in IRT, you can see the instrument, the periodicity, what session we're trading, all at the top of all of them, right? So there should be no question. This is the RTH session only, and it is daily candlesticks. One day right there. Wherever price overlaps, I draw or continue to draw the volume, this volume profile around them, which I refer to as micro composite volume profile. And that generates a micro composite VPOC, volume point of control, high and low volume nodes, which are pushed to bookmap. These things like the POC and the highs and the lows and the all-time high and that stuff, I enter manually in bookmap. The session prices here also push automatically to bookmap, which brings us to bookmap. Bookmap, my execution platform so far today, currently. I've used Jigsaw and others in the past. This is the ladder or the dome or the order book, whatever you want to call it. And what it is, nothing more than all the prices and the resting liquidity, the resting orders, which are sitting at every price. As they change, the numbers are updated. Simple. This is the micro composite column where I enter those values manually that I just described. There's the POC yesterday. Here's the naked volume point of control from yesterday, for yesterday's RTH right there. This is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. This is not the ETH. This is the Globex or the full session, however you want to refer to it. RTH volume profile. This resets at 8:30 this morning when we open the RTH session, regular trading hours session. Cash market. Important column here for me. This is my notes column where the first thing I do is determine the open type for the day, for today's RTH session, and then I change the column title to reflect that. Because when I look back at a snap or the recording, I can look at this title of this column and I instantly know what happened overnight. You know, what the outcome was. And where we opened in relationship to today. Now, there's only two criteria. There's only 4 open types, and there's only 2 criteria in this statistics study. So if we opened right here, here's price right now. If we opened right here, right now, how would that price compare to the previous RTH range, close, which is right there? It's lower than the close. And how would it compare to the previous RTH range? Well, there's the high and there's the low. At this very moment, we're lower in range. All of this has been lower out of range, which would be gap down. And I hate these kind of opens because I'll get all the statistics put over here, and then all of a sudden the damn thing is going to go underneath, right, and be a gap. So I only put the basics in for now. Okay, the next step is, so I'm going to leave it at lower in range because that's where we are at this moment, just by a breath. And then I'm going to clear the notes because obviously we're going to enter them all, the statistics again, based on this. With their, and enter the statistics by their associated price levels. And these are the session prices pushed automatically from Bookmap from IRT to Bookmap. And I share these freely, openly, no problem. Happy to do so with a whole bunch of people, and certainly anybody here. Drop a like, subscribe, and let me know if you'd like the session prices. And I start pushing these at 1700 on Sunday night, and they continue nonstop, real time until 1600 on Friday. So you can either do a cloud note column, you can have them power this lines indicator. Price level indicator. You can use them. It's a CSV file. It comes from Google, so you can push them wherever you want, wherever you need them. Now you see we were lower out of range here, lower out of range a minute ago. God, I hate that. Now we're just right on the cusp. Anyway, the next thing to notice is that there's nothing magical or mysterious about my pricing or my levels, and they are all. You also notice that there's no indicator on my Bookmap or IRT. POC for the full session, or for the RTH session, POC for the full session. Full session's a little more muted yellow. What is the POC? Nothing more complicated than a marker for the price at which the most contracts have traded so far in the session. So 47.5, the most contracts have traded so far in the overnight session, and that's 3,512. The split second at any one of these other price levels is 3,513. This yellow line is going to move there. That's all there is to it. It plots a yellow line, continuous plot of this price, just so that we can get an idea what the movement is like. There's an RTH VWAP and a full session VWAP or Globex. That's volume weighted average price. And technically, I guess you could say that's an indicator. So I guess I have one. Then there's the mid for the RTH. Nothing else complicated. A couple of price levels that do confuse some people is the IB high and low. Because of the naming, it's an old market profile thing for initial balance. Who knows? But what this level really represents, actually, the high and the low of the first 1 hour of the RTH trading session. In other words, this will reset to the high, this will reset to the low of our when our session opens, and they will continue to move down or up for the first 1 hour. At 9:30 Central Standard Time, they stop moving. Period. That's how complicated it is. Pretty easy. So now we're lower out of range. So now we would be considered a gap down. Jesus, I hate it. Okay, let's look at the statistics and see how that comes together. The statistics come from this study in IRT. However I can do this. So here, IRT graciously highlights the correct open type, and this is from yesterday. Of course, it can only do that after 8:30, so, that's why we have to do this ourselves in the pre-market. Lower in range and lower out of range. This is gap down, gap up, higher in range, lower in range, okay? There's only 4. The study is real simple. It looks back at 1,600, at the previous recent 1,635 trading days. Of these trading days, we opened lower in range 480 of those days. Of the days where we opened lower in range, I'm going to go with gap down, I think, just because I think that's the way they're leaning. This is lower out of range. So of the days where we opened lower out of range, that was 239 days did we gap down. Price revisited the overnight volume point of control 177 times, 4.1% of the time. Let's get back over here, and here's the overnight volume point of control buried under there, right there, right? So it is 74.1. Pretty complicated, huh? And let's change this column title to gap down. Lower out of range. And one other thing I'm going to do here, see the close. Oh, I'm sorry. The high is up here. I work gaps. The low. Here we go. I work gaps based on range. So what I'm going to do here right now, until something different happens, is put in the gap high from yesterday. Ooh, gap high. 091225. Okay. Because that's the range, the low of the range from yesterday's RTH session. And that is what I would consider the high, the gap high, because we're going to gap lower. Wherever we open, that will be the gap low. And that, in my world, that constitutes the gap. So let's get back to the statistics now that I've got it myself and perhaps you all confused. The overnight low is 70.3. See it? And I'm just going to go down the list. Overnight low, 70.3. Oh, here's a good one for us. The IB high is 69.0. So let's get up here to the IB high. And that is 69.0 IB high. And I type that. I'm sure you understand why. The moment we open the RTH session, this flag is going to zoom down to the above the price. This one is going to zoom down below the price. They will no longer be there. And I will want to know what was at 69.0. Overnight mid is 67.8. And it went somewhere down here. Well, probably right about there. 67.8. They're all stacked up. That's typical. Previous low is 66.1. They're all stacked on top of each other, and that's absolutely expected because they're in the hold, right? If you want to trade this and you want to give your money to some, Goldman Sachs, knock yourself out. But if you have a vetted trade, fine. 41.4 is the previous close. Now here's a good one. Here's the previous close, and the statistic is 41.4. The overnight mid is at the same level, and it's 67.8. This should illustrate very clearly that these are probabilities. They're not hard and fast lines in the sand. That by no means is a contradiction. The probability of this being revisited when we look back over 1,635 trading days. The data set is 1,635 trading days, the most recent, obviously. 1,635 trading days, and this is the percentage of time that price revisited the overnight mid. 47 or whatever I said it was. 41.4% of the time, price revisited the overnight close, or the previous close. That's simple. It's not contradictory whatsoever. The overnight low, or the IB low, is 60.7. Now, that's kind of also interesting, right? 60.7 IB low. I would think, wouldn't you think, that we would probably knock that one out of there? How are we going to get to 69.0 without getting through 60 first or 67 first? You see? Probabilities. It only looks at the two parameters which I described. It looks at the relationship between the open and the close, the open and the range. That's it. Now I need to do something else. I need to do the TLab snap, which is something I do every day at 8:20 when I remember to, when I get my shit together. And what you ask, rightfully so, is the TLab snap. Well, it is a bookmap Discord chat room called the Traders Lab. It was, and I guess started and continues to be led by a fella named Tom B, whatever his last name is. And it's probably one of the only sites, obviously, besides here, that are Discords or anything else, streams that I have any confidence recommending. And I do that for one reason. I have never seen, and I trust will never happen, anybody will ever be solicited for anything. Tom reportedly is a professional trader with 46 years plus experience. He doesn't trade live. He doesn't call trades. You're never going to see his verified account, But I believe that he's telling the truth. So, and that he is what he represents himself to be. There's a good crew of people in there for sure. And I spent a lot of time there prior to starting this stream, which was essentially an suggestion from the TLab and Tom, in that it's really important to stay focused in the market and narrate the entire day by journaling, etc. Also, he's a big proponent of vetting and trading statistically, which am I. So there you go. I make 2 snaps in there. This is one of them at 8:20. This gives all the folks there that don't have this kind of report or charting all the numbers they might need. And I post the reports, and then, the reports at about 6, and I do this snap at about 8:20 every day. All right, let's get back to, now that that's over with, let's get back to something that's probably pretty important. Would you like to be able to trade today? The only way to trade with IRT is to initiate the trade control panel and choose a method that you will use to enter or trade with your mouse. And look at this son of a bitch has now gone over the low, so we're now lower in range instead of out of range. I hate that. That's what I was talking about. I'll change the stuff later. I'm not going to rush around. If you choose chart, the only place you can trade with your mouse is the active data column here. If you choose DOM, the only place for the DOM columns in both is, guess what? I use multi-brackets. Oh, wrong one. I don't want to see them. There you go. I use multi-brackets. This is how first, I never trade without a bracket order, stops and targets. And I don't think anybody else should. This is the smallest risk-neutral package you can use, and this is where the risk-neutral methodology is applied to my trading. So there's two lots, and because they need to be an even number. The next real important thing you need to do is determine your stop size for the package. And the way to do that, the first criteria is to assess your account risk parameter. Also, once that's been, the volatility of the contract. Today's a real stupid day to be trading unless you have a vetted signal, you know what I mean? Once this has been established, the second or the first take profit target, which is T1, which is the risk neutral scale, is for half of the package. That's why it needs to be an even number. The same number of ticks positively as the stop is negative. Then you have a runner. You can have forerunners, you can have high volatility, you can have whatever you want. So now we can trade. The green panel locks open, and notice that I have all these trade metrics here, and they're replicated up here. You can turn these off and on, by the way, and I have them set for ticks, not for money. I don't believe you should trade your P&L. But I don't need the rest of these tools in the trade control panel anymore, and I know that this is the correct package size, so I can click this button again, and it stays green because we've selected a way to trade, a method to use with the mouse. But I get the real estate back, and I have all of my metrics, plus I have cancel and close. So I'm ready to trade a 2-lot risk neutral bracket. Oh, good for you. Now we're back down to lower out of range again. And here we go. And we're going to open in about a minute and a half. So I think pretty much ready here for that one. All right, we're going to open in less than a minute. Let's hope this damn thing resets properly. We're lower out of range. That's good. So it's gap. We're in gap rules. Looking to open in gap rules. Oh, I'm going to be busy bitching and moaning here about the column reset if that doesn't happen. And we'll see. 30 seconds for that. And then we'll go through gap rules. Look at us right there on the cusp. Right on the cusp. You can bet that every higher time frame trader is busy figuring out how they're going to put the screws to retail. Well, there we go. I got it to reset okay, looks like. I'm amazed. I've been tweaking with the reset stuff. All right, the next thing I'm going to do here is I'm going to reset my charts from full session to RTH on IRT, like that. Pretty tough, huh? Yesterday's RTH session, today's RTH session. Yesterday's RTH session and the open. So we're gap down and away we go. Righty-ho. What are gap rules? Well, they are. Stand by. I'm busy. I can't. This is why I stream. I don't multitask worth a crap anymore. When I'm focused on the things that I believe are important to focus on for trading as my business, well, got to prioritize, right? And that's the reason I stream this stream. Okie dokie. There we go. And we're back on the minute micros. And we're open, and there we go. And everybody's happy. Okay. Now, the reason I stream is because all of the video, everything to do with the charting is captured in the video, and my incessant voiceover here provides insight as to what I was thinking at the time. Now, and that's how it works. And that's why I do this. And I stream it to YouTube for increased transparency and accountability, A. And B, I can review the stream on any device. Now, the stream is 7 hours long. And I'm standing here from around 6 in the morning, and I use the word standing correctly because these are two standing desks. I don't have a chair in here. And I'm at the desk here from around 6 in the morning till about 2200 every day. And granted, I walk away, I do things right, but I'm on the clock. Oh, Antonio, Fed watch day, my brother. Margins are doubled. Margins are up to 25%. So if that's an impact or means anything to you, there you go. Yeah. So here we are. There's our open. And there's our one tick, or right on. It looks like one tick below the previous RTH low. So if that's, yeah, I can't even put it in here, and that's ridiculous. I'm not going to try to. It's not a gap. It's stupid. But I'm just anal enough that I probably will try to do that. So this is a nothing burger. Gap low. 10, 12, 25. Okay. Now, when this gap is taken out, closed, I'll set these to 0 to black, the text to black. Just my workflow. Gap rules, even though it's meaningless, gap rules are that if we open in a gap and we close the gap relatively early in the session, there's a high probability that we will trade across the previous value area. And this is all just, look it up because there's nothing to worry about today. So, but you have to stick to a process, and I do that. Well, I think I've actually got this working. That is just freaking phenomenal. What I ended up having to do here, in case anybody else is hears this and is having trouble getting this volume profile to reset correctly, I'm using the session start option, and I had to correct the time of the session start to 8:30 plus 15 seconds, because I noticed without that correction, it was starting 15 seconds early. It was resetting 15 seconds early. Don't ask me. The computer clock is synced to the universal time server every morning at 7 o'clock by a task I created. I run Rhythmic in admin mode with the selection that Rhythmic resets this computer's clock every 2 minutes. So tell me how it's got to be a bookmap function. I mean, what do you want? There you go. Well, my anticipation for an open auction is a classic example of why you don't predict what's going to happen. Trade what you see, not what you think. Look how liquidity is jamming up or following this, chasing this down. These guys want to spank some people and get this thing down to, obviously this is all some profit taking, a small batch of retail soup, but the whole thrust of the morning is positioning for the Fed rate decision, which is at 1300 this afternoon, 1 o'clock. If you don't do military. Okay, we don't have Blue Boy on the job. What kind of a remiss mess. Now, this is an extremely valuable proprietary indicator, so don't watch. It is a vertical line, baby. That's good enough. The girl that I go with right there. What this is for is just a visual cue for me. When I glance left, I want to see Blue Boy. That means I have the entire session, this current session, in view on the chart. So I have an absolute, clear, full understanding of the session context, because I believe that's really important. So we traded down to the Globex low, and then it went hidey-ho, and up we go. Look at there. What do you suppose that's about? Looks to me like they took some profit, and they had a little business to continue, I guess. I mean, this is strictly rearview mirror, of course, but they had a little into the open. We were trading down, and that continued. So I guess they had some more stuff to sell or profit to take from all of these guys up here. They had to get their inventory adjusted, and now what are we doing? Looks like we're going the other way. Pretty quick, we're going to have the gap closed. Oh, there we go. Come on, close that gap. It's a huge one. Come on. You can go another tick. I think they actually have right here. Oh, they've closed it up here. Never mind. How did that happen? Over here? Oh, yeah, right there. Okay. So my workflow here, sorry about that. My workflow here is to change the text color. Once the any level has been revisited, this is just FYI. I changed the text color to black, so I know it's not hot or current anymore. And then I can take it out of the column, out of the column here on, overnight, or when I remember, or the weekend, whatever. We've actually, something's not right here. Something is not right. What the hell? 68.55. Oh, I'm a dumb little dunce over here. Look at there. I got this the wrong spot. 68.55. Sorry about that. I hope I didn't mislead anyone. There's the micro composite VPOC 68.55. Am I on the micros? Yep. What the hell was I looking at? I was looking, when I put that in there, I had it on the minis. You see, this is why some people trade, they watch the mini and trade the micro or whatever that cross. I think it's a bad idea. The volume is different, and here's a classic example. The micro composite for the mini was down here at 48 and change. Here it is on the micro. So, let your conscience be your guide, but there you go. I would never do that. So if you could do that successfully, good for you. I noticed several people in static, a couple of guys in static do that. They watch the mini and apparently you can do it on Bookmap. You can watch and plot the mini over here. Right here, and then have it set up so that when you execute, you're trading the micro. I don't get why they wouldn't just watch one of them. Watch the instrument you're trading seems to make sense to me. So this is going to be a cluster until until 1300 is my opinion, and who knows who will say what. I don't know. Trump was on a big campaign swing, I guess that you could call it, in Pennsylvania last night, and a lot of crazy looking news out of there. I don't know what's happening. I don't know what ended up happening. Let's look at our news sources here and see what the hell's going on. Well, I'm getting tired of that. Well, there you go. That's the big one. Boom, boom, nothing till then, crude inventory, okay. Okay. Oracle reports today, by the way, in case you're interested in earnings. The little quarter moon means after the close. The sun means, of course, before the open, in case you don't know that. Okay, well. So we've closed the gap, we've traded up, we're tagging settlement, gotten through the previous close. Hose knows anything goes. Oh, I can't believe I've got that goofy thing to reset. I just had a follow-up email this morning from Bookmap support. Sorry, delayed reply about suggesting what to do, how to, roll back to a different version and whatever else. But hey, I am very definitely a if it ain't broke, don't fix it person. So I had an old guy that I used to be associated with also from the West. He was from Wyoming. His philosophy was, if it breaks, fix it. If it breaks again, fix it. If it breaks again and you can't fix it, do without. Kind of contrary to the mode of thinking nowadays of excessive. Now it's if it breaks or if it looks like it's worn, throw it away and buy a new one. I think how it goes. Consumerism or whatever you call it. He was also from a previous time and is gone now. Rest in peace, Bill Addison. Whatever you believe about what happens to people when they're dead. Well, there is the initial balance high. Are we rich yet? Did we have a stat? Of course we didn't. The initial balance is working though, and I'm pretty tickled. You see how the low is, flag is right down here? High is right up here. Let's look at something. What the hell was this? Oh, that's why we put the flag. So this is the location of the previous day's IB high. And if you think sorry about that. Right here. And if you think I'm lying to you, first of all, let me say that I try to keep my color coding consistent across both platforms. Here's yesterday's RTH. There's yesterday's RTH initial balance high. There you go. Isn't it cute? This is just all common sense and data. That's the best I can do. Oh, let me see what's happening with the new. I've been trying to get the backtesting signals lined out a little more user friendly. They won't start doing anything till now, but let's see what's happening here. Do I have that pushed over here? I'm pretty sure I do. Yeah. Some of this stuff is because I think it's really helpful and because I think it, and then I have a tendency to zoom down rabbit holes the minute one presents itself, so. I have to be careful with that one. Okay, this is the backtesting tab and the triggers and all that stuff. The system, the trading system. Now this system is being pushed to this chart and it's all going to be trading and flagging, plotting trades within the IRT simulated environment, IRT only. And I make sure I've got this note here so that the account is not the live, AMP account, especially now in this day. I also make sure that the trading list up here with this quote page is 0 symbols because that's a requirement Bookmap needs to send a trade to the broker. So transparency, this is trading live in real time, but it's not going anyplace besides here in IRT. Thank you very much. The way those plots will look are, come on. What's going on here? God damn it. This thing is just irritating me beyond all measure. There we go. This is how they will plot. This is from yesterday. 2 scratches yesterday. That's all that was signaled. There's the entire day. There's 9:30 and over here is, well, no, this is 12 something, but they were only 2 trades. That's how they plot. Entry, God damn it. Yeah, I give up. Never mind. You get the point. You get the picture. I don't know why this thing is doing that. But there you go. Whatever. And something else that's important to see, I think. Man, I don't know why this is struggling to do what it's supposed to do. Why is that? Somebody that knows? And here are the trades from yesterday as plotted by Bookmap. This is what I wanted to show you for transparency and accountability. Absolutely no question where the entry was, T1, stop, T2, yada, yada, yada. Times, the entire details, MAE, MFE, everything, an outcome down here. Oh, there you go. Remember, this is my virtual trading journal, so who would I be trying to bullshit? Me? I don't think that makes a lot of sense. Well, let's see now. Gap rule, I didn't get the open in there, but we know when that is. I'll throw that in there now, I guess. I can change it when I put the recording in. I mean, when I put I try to keep up accurately as possible with the timestamps for the chapter on the stream, because obviously the stream is 7 hours long, minimum. I'm guarantee I'm not going to sit and listen to 7 hours of it to get to some point that I want to know about. So I try to keep the time stamps up to date so they're real accurate, so you can move from trade to trade or exit or, break even scale or whatever it is, pre-market, description about gap rules, all that kind of stuff, whatever. Those are only input. I can only put those chapter markers into the stream after the stream is finished, because I do that in the YouTube studio. I don't know another way to do it. I use a tool, a plug-in tool, chapter markers in OBS. If somebody knows something better, let me know. As usual now with this vetting process that I'm doing, I would take a trade assuming that it is signaled by the system. But I want to think about it long and hard, and I certainly do not want to be in a position going into the number. So and also, I think I mentioned this, but maybe not. The CME has raised the margin requirements ahead of this number. But at least AMP brokerage has, and I think all brokers, from, $400 for a mini to $5,200 and whatever it is, 25% of the carry margin. So in the case of a micro, instead of $40, it's $580 something. So say $600. So if you don't have $1,200 in your account, you can't trade a 2-lot micro. It'll be closed immediately, and you'll get a margin call. And I don't know, with today's computers as they are, and rather than dealing with a margin call and all of that crap, I've never tried this, and I don't plan on it. But I would suppose that the risk management system that they have in place would prevent you from taking a trade, from placing a trade, if you didn't have sufficient margin to cover it. I mean, will they let me put Will they let me put a, you know, 100 lot on? I don't think so. I don't know. That's interesting. I'm certainly just not going to try it. Maybe if somebody else knows, let me know. Antonio, I think you're trading 1,000 lots now, aren't you? Well, you can bet that the, well, I shouldn't say that, I guess. There's going to be a lot of YOLO and prop firm low-yoing or YOLOing or whatever that stands for going on today. Let me see if I have that. Let me see if I can. That's good to have available for the stream. Oh, wait a minute. Ampfutures.com news. Let me see if I can get there over here. God damn, why is this thing doing that? Oh man. Well, I don't want to do that very bad. Huh. Well, that's pretty freaking stupid. Let's see if I can get somewhere here. I don't know. I'm trying to see something here. Sorry. I wish their stuff was a little more. Seems like they have kind of a funky site when it comes to navigation. I just get to AMP. Why can't I just get to AMP futures? I'm trying to be a good boy and convert to margin change. Oh, that's what I want to do. Edge from Chrome, and man, I tell you, I'm having a problem with that. Okay, here's what I was looking for. So here you go. Margin U.S. economic news releases. So here is the standard micro is $40 day trading. It is now $594.50. If you're trading the minis, it's $400. It's now $5,945. Obviously 10. And based on these are the new reporting dates based on that stupidness with the closing of the government. And here we go again. And put it on your calendar if you want. And you can slap them right on your calendar if you want to do that. So there you go. I have no idea how that applies everywhere else, but I would suppose it's probably inconsistent. Okay. Enough of that. Back to that. 9 o'clock. Oh, yeah, baby. Oh, yeah. So I will state at the outset here in advance, as opposed to rear view mirroring it, I'm going to really keep a close watch on the session, the price action within the section. And my initial thought right now is that I will use my discretion and not manually enter a live trade in Bookmap, as I always do when I have a trade fire in the system. Okay, remember, this is from the point of view of, homework and gathering data, this is valid, but it's simulated within IRT. This is how I get all of, Jesus, I'm tired of that. I actually bought a new mouse because the wireless mouse was doing that. This has got to be something to do with the system. These are backtests. Each one of these, each one of these is backtest over 493 days, 700 trades, 1,100 trades with the varying entry parameters and all of the statistics you could possibly want, including Sharpe ratio, Saltino, whatever else. These are the minis, and there's, this 72 of them. Each one of these is a complete backtest over this many days. And this is how I do it with IRT, and you do the backtest by using the system and then setting up backtest. And I would set up 488 or 500 days, the instrument, contracts, the session, what reports I want to see, okay, and hit the backtest. And it takes the computer about 5 seconds or 6 to evaluate each one of these rules over every 15-second bar going back 500 trading days. It's pretty phenomenal. And you get a backtest from that. Well, so this is how I vet a trade to trade it. Now, this is just a visual confirmation tool for me to be sure that these rules are firing if and when I think they're supposed to. And typically what I'm doing now as a forward test is when a system fires over here. Let's see if we can see one of them before it gets all discombobulated. Come on. Right there. When a system fires over here, like there, I immediately enter the trade manually in Bookmap, the same direction, the same everything, using the rules. So now I've spent many hours last night trying to get the rules, the signals straightened out from here. So that they fire sequentially over here instead of not just all over the board. And I'm real curious to see what happens today. But I'm saying right here, right now, with FedWatch in play, margins elevated, I am about 90% sure that I will not take a live trade ahead of the Fed. So there you go. I don't think that's a good use of margin in account, you know. You got to remember that my basic principle here is that the basic prime responsibility of a trader who is approaching this as a business is to maintain and preserve your account, and then obviously to grow your account. And you know, jumping in front of a freight train or doing something, you know, that I would say is not necessarily prudent is not a good way to do with it. Doesn't fall in line with that risk management. Also, of course, you know, if you've been around here at all, that the only trades I have vetted, as was evident on the back test, are the initial balance trades. So we know the definition of the initial balance is the high or the low of the first 1 hour. And we have only been 37 minutes. So there is no statistic. There is no possibility for a signal. And, you know, I'm just ahead of the curve here. This is not going to, I try to be proactive and never have it seem like it's rear view mirror stuff. Just, you know, that's so easy at, you know, a couple hours into the market to go back and start over here and go, well, here was the overnight. Well, we tested down here at the overnight low and I knew to do this and blah, blah, blah. All of that stuff can sound really well depending on how experienced you are, but it's all looking in the rear view mirror. Tell me what you're going to do right here, right now on the hard right edge. That matters to me. I try to make sure that all the data I need for trading is right here on the hard right edge, because this is where it happened, baby. Here you go. Tell me where the market's going now, Einstein, with the rear view mirror. You know, that's the key, I think. That's the way I look at it. Just quickly, you know, we've got Blue Boy on the job, so that's great. And we've got 1 point or 1 point high on the price ladder here, meaning that between each of these numbers is 4 ticks. And that way, I do that so that I have a consistent sense of scale. Yeah, I need to think about that long and hard about the trading. And I hope to hell these signals work right. That's going to be a big, if I got that straightened out, I'm going to be really happy about all the hours of work I put in last night and whatever else, you know. That'd be great. That would be great. $9.10. A big fat hen. So the initial balance. Here, let's see what I'm doing. I was busy typing something to JR and Static. Okay, the initial balance trades, which I would hope everybody understands at this point. First of all, the first criteria is the initial balance statistic. The initial balance statistic cannot be a thing until it's 9:30. However, let's assume that it's 9:30. What is that statistic, or what can we anticipate about the statistic? Here we go. See how IRT conveniently highlights the correct open type? Okay. In all four open types, the least probability for the initial balance stat is 97.5. That's today. You see? 97.8, 97.8, 98.5, 97.5. This probability means that of the 1,636 days the system is looking back at, we revisited the overnight or the IB high or low at some point in the balance of the RTH trading session after 9:30 and before 1,600, 234 times. 97.5% means that there's a 2.5% probability we won't touch either one of them. There is also a, where'd it go? There's also a 31.7% probability that we'll touch them both or get them both. That's the initial balance statistic. Okay? So, over here, this system looks at, it has three rules. The first is, well, we're trading up here by the initial balance high, okay? So the first signal would be that we take that initial balance statistic. Let's look over here. This is the initial balance high from yesterday, low from yesterday. Let's pretend that that's today. We take the initial, there's the statistic. We take that. Price trades up to the continuation zone, pulls back to the trigger zone, wiggle along, and away we go. Price trades down to the pullback zone, pulls back to the trigger zone, we go short, and away we go. 2 trades associated around each of the initial balance trades. One is an IBC or continuation. One is an IBF or failure. Simple. The IB failure trade is essentially a mean reversion trade, isn't it? It's outside in, outside in. And if you think about it for a minute, you can look at this, why I'm so, a stickler about why I believe that context is so important and the volume profiles here and stuff. If you had to think about it, the mean reversion or the IB failure is simply a mean reversion trade with a different name based on the initial balance levels of statistics. You can also vet a mean reversion. A lot of people trade them, outside in, outside in. The reason I chose the initial balance trades to statistically verify first was because I have 2 opportunities, so I will have 2 vetted setups, one for a continuation session and one for a rotational or balance session. This is my thinking. I'm just thinking out loud here. So if it's a rotational day, you would expect it to be an IB failure, wouldn't you? The thing about that is, as the joke goes, it's rotational till it's not. So you really don't ever know when that not happens until after the fact, which can be kind of disappointing. And also it's important to look at this, 52.31. So we're 21 handles high in this range so far. And we would not even be close to that if there wasn't this little hoop-de-doo down here. And what that was about, I don't know. I guess just knocking out some stops. So that's where we are at this moment. Kept her going. Why? Stops, I guess. Business to get done. Inventory to correct. And now we're back up here. Notice we're within range of, the last couple of days here. And I am very, very, a few more minutes to consider it again, but I'm pretty certain that I will not be taking the trade, assuming that even if one is signaled, until 9:30. That doesn't seem like a good application. My theory about this environment that we're in now is that it has the potential, an unknown or unidentified high risk potential, critical risk potential, that I feel it's only good business sense as a trading business to apply, to put your account at risk to the market only around A+ setups in good environments. Do I think that a tight chopping day heading into the biggest Fed rate decision that I can remember in a long time is a good idea? No, I don't think so. And I'm going to stick to that. Also, I guess it's worth pointing out at this point that this is just my virtual trading journal. My voiceover here is to get my thinking at the moment into the stream and the recording. Not my way or the highway. If gunslinging and, whipping and spurring is your way to trade and you're successful at it over a consistently profitable over a statistically significant amount of data, good for you. Don't change. Let us know. Throw something in the chat. Antonio and I are all ears, I'm sure. So I'm approaching it from my point of view. And everybody, and that's how you've got to do it. That's how every individual trader has to do it. Tom B's risk parameters, Rod's risk parameters got nothing to do with mine. And if you try to trade based on some genius on YouTube or Twitter or something and think that that's going to happen for you, I think it might be a bad ending, or at least disappointing. And these guys that move their stop all around and do all that stuff, I got a million things to say about that. But and also, I guess it's time for my speech about unidentified risk, because I want to make, I got to say, I need to put this in the description, and then I don't have to blabber about it every day. When I talk about risk and the news and reports and that stuff, I have no political axe to grind at all. However you voted, whoever you think, whatever you think, I don't care. And nor should you about my beliefs and policies. We are traders. Don't care if you have a red ball cap or a blue ball cap on. Okay? We're traders. Our object is to compound our account, grow our account in the markets. The first thing that any businessman, project manager, construction guy, anybody, I think, pretty much, the first thing after you've established the premise of your business, the first thing you need to identify, and you better identify, is potential risks to that business. And how are you going to plan for them? How are you going to mitigate them? In our case, how are you going to control your risk and not get blown up? Well, in today's world, we have, no political comment, a huge potential unidentified risk. And that's anytime certain members of the administration, and especially Trump, gets in front of a microphone or a camera. This right, or a phone. This right here is 229 handle dump based on an unplanned, unscheduled, unverified tweet by Trump on Truth Social at 10 o'clock in the morning on a Friday. Perfectly his business to do so. No comment whatsoever. But if you were in a trade there and you didn't have bracket orders and weren't prepared, this could ruin your entire day, week, year, life right there. That's all I'm saying. So when I talk about an unidentified critical risk, that's what it is. And that's why I like, as I mentioned, that's why I like what Financial Juice does here. Here you go. No, that's already been scheduled. That's why I like Financial Juice, because they do add these things into the calendar, and investing.com does not, and how, I guess I should differentiate between standard normal risk and unidentified critical risk. We've known this Fed meeting was going to happen. It's been on the calendar for months. Today at 1300. We know that the first Friday of every month at 7:30 in the morning, we're going to get the non-farm payroll release. You can plan for those. You can have a risk management plan, a risk mitigation plan in place. When you get some nonsense like this out of no place at 10 in the morning on a tweet, Jesus, it's amazing to me that our policy is being, whatever, that is a political statement, I guess, but it is shocking to me what's happened to America, and the fact that such an impact based on a tweet, on a social media thing, is incredible. But that's what happened. That you better be ready for. And the only way I know to do that is only take A-plus trades that you have previously vetted. Definitely have full brackets in the market. You're going to get slippage probably, but at least you're going to get saved, maybe. Okay, that's the end of that. And what time is it? Oh. you'll notice the pullback zones and the trigger zones are not over here because it's not 9:30 yet. At 9:30, they will miraculously materialize, and they will be pushed. Hold on. They will suddenly appear over here around the IB high and the IB low. So that's pretty cool, I guess. And that's just something I've done to try to make this process better. These highs and lows zones and all that stuff, again, are not part of the trading system, but they are for me to visually confirm stuff's happening when I think it's supposed to. And now that I'm live trading this stuff, when I see a signal fire on the system, you know, on that chart, on the backtest chart, I enter it manually. Typically today, no, because of the Fed meeting. But I enter it manually. So what I'm trying to do is identify how to not lean on the IRT chart for my trigger, and you'll see what I do there. So that I got two things I can do as I see it right now. I can shit-can Bookmap and watch and trade IRT, or I can figure out how to be able to lean and accurately determine setups, entries, and stuff with Bookmap, and that's what I'm trying to do at this point. Yeah, there you go. Nothing else to say, I don't think. I'm real hopeful that this signal thing straightens out, because there's a couple people, Garrett and some guys are using liking that signal and trying to get somewhere with it, those signals, and follow along. And the chaotic way they were firing was confusing. Not to me, because I obviously figured them out, but on the trading system, the signals fire sequentially, an A, then a B, then a trigger. Then when you're in a trade, no signals fire until the position goes flat. Then all those flags are set back to 0, and you start over again. And I just see something here that's pretty weird. So yeah, and that's what but on the chart itself, each signal was just basically coded to meet the requirement and not having no relationship or spatial awareness of the other signals, so that you could get 6 Bs in a row firing around and no A or triggers or whatever else. So that's what I'm trying to avoid. This gives me something to do. Keeps me out of trouble. Keeps me out of the bars. And so far, you know, these are, golly. These are trades, live trades every day that have been taken on the live AMP account based on the signals and stuff from Bookmap. So there's, you know, there's the average winner, the average loser, the win rate, the trades per day, ticks per day, P&L, all-in costs, total number of trades, lots traded, days traded, blah, 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 R multiple expectancy, you know. So I'm trying to get I'm trying to get the numbers figured out as best I can. I don't know what was supposed to be up there before, but I don't think it needs to be a that. I'm just, you know, it's a work in progress, absolutely. But it's a business in progress, not a video game in progress. I hope. That's the plan. Okay, the initial balance statistic is a live thing, baby. The initial balance high will no longer go up, nor will the low go down. And this brings me to my daily advice is to do not, in my opinion, it's my experience, do not trade in anticipation of the statistic. It's real easy to do and real easy to get clobbered, I think. And what I mean by that is obviously, okay, we get down in here someplace, oh, well, we're below all the main levels. We're going to take the IB low, and you try to get down there, then you get spanked. Look at what happened up here. Imagine this was an after now. There's two times up, sold off to a stop. My experience, my data is that trying to trade to the statistic in anticipation of it has a high probability of a stop. After the statistic's made, different story. And here come the session, here come the signal lines, you know, the zones, because it's 9:30. That's all I know to do. That's set properly, so that's good. Yeah. Okay, now you'll notice the levels and their labels are now here on Bookmap. Continuation, trigger, IB, pullback. And the same for the IB low. Gonna mute this bad boy a little bit here. I can see this heat map, I guess you probably know, is just a graphic representation of the order book. You know, right here is 233 contracts or whatever it is. 163 came in the book there, lifted off there, whatever. Excuse me. There are other domes that are really more efficient, and you know, you can see the pulling and stacking and all that, like Jigsaw, for example. But I'm sort of dyslexic, and my eyes are getting, they're not getting better. Let's put it that way. And you know, a dome full of numbers is flashing around is kind of a big pile of soup for me. So I'm a little bit more. I guess the graphic representation makes a little more sense to me at this point. And no signal. Now, if they want to be, if the market wants to be nice to me, they will not give me a trade signal until after the Fed meeting. You know, that'd be handy. Then I wouldn't have to make this decision. The reason I'm commiserating about this is the theory about vetting trades is that you do all the homework, which is where the real work comes in, to identifying your setup, capturing the statistically significant data set, analyzing what's the best, doing a bunch of what if stuff to optimize it. After you've determined that, then your job as a trader is to take each and every one of those setups and parameters that present themselves in the live market. And you do all that homework away from the live market. You should not make any homework or any changes to your trade plan during the trading session, in my opinion. It's the same principle as gambling, as, you know, from the point of view of a casino. The most successful traders in the world all know it. It's probabilities, that it's a business of probabilities. You establish a setup or an edge, something with an edge, and then you exploit that edge and lean on the law of large numbers. So the dilemma for me now is that I understand that, and I have vetted these trades, and do I not take a signal trade today because of the unusual environment? That's not something that I considered previously, frankly. So, you know, so there you go. Something to think about tonight during the homework, eh? But I think it's I think it's reasonably prudent that if there's a question, you don't throw on a trade, put your account at risk just to see what might happen. I don't think that makes a lot of sense as I stand here and think about it. This is a job for a homemade biscotte, and I'm going to have one right now, I think. Maybe that's it. Maybe I got low blood sugar. Okie dokie. And our IB low, wait a minute, where's that useless blue devil? Come on now. There's our IB low, right ahead of whatever the hell that is at the 30 handle. 239 contracts living down here at the 30 handle. The biggest liquidity pile is up here at the 33s, and that's where they turned it around just now. What I was going to say was, in these prices, unless I get something else that I can get a better view of it, Prices look like they're just flying around in the middle of outer space. Well, here's... Oh, I know what to do. Better yet. Let's look at the... Jesus Christ. Let's look at the TLab snaps chart. Well, here we are. Way low here. How about the Mr. Micro Composite over here? POCs. Yeah, obviously, I hope you understand that these are daily candles, remember, and there's today. So we're pretty much in outer space down here if we poke out a low. I don't know. That's a real quandary and low volume. That'll be a decision I need to take, but I want to have it thought out. And this is the reason why you don't do changes to your trade plan during the live trading session. Think about all these things. You do them during your homework period at night. You want to have a cool, clear mind, no adrenaline zooming around, monkey boys out in the backyard someplace playing, you know what I mean? It's not, or Hyde or FOMO or whatever that stuff is. So that's why I think it's important to, I'm trying to make this decision now before, and it's a bad one to make in the trading session, and I'm trying to be as emotionally uncharged as humanly possible here. Of course, the thought of taking a good trade is always a nice idea, isn't it? But I think my decision is going to be that I will not take a live trade in Bookmap, even though it's signaled and happens on IRT. Because I guess that if the FOMC and everybody else, I mean, if the CME and the brokers think it's important enough and risky enough to increase the margin by 10%, go up to 25% of your carry margin, that ought to be a heads up to me that it isn't a very target-rich environment, maybe, huh? And maybe the market gods will not throw temptation in my path there, huh? You never know. Ooh, was that biblical, maybe? So far, not. I'm going to scooch this up now a little bit so that we have our session centered. I can raise them up if necessary. So obviously the first signal would be the accomplishment of the initial balance statistic, whichever side. The conventional wisdom has always, that I've heard, oh, excuse me, wait a minute. Excuse me. The conventional wisdom that as I understand it, is that typically it takes the higher time frame to bring price out of the IB. If they're not engaged in the market, price is going to just flop around inside the initial balance. Is that vetted? Have I proven that over a statistically significant data set or a bunch of samples? No, I haven't. And so I guess I should shut up, but just, thinking out loud here, which would suggest to me, I mean, I don't think the higher time frame, they are positioned for this opening, for this rate decision long before this morning, I believe. So it wouldn't surprise me at all if we did not have the IB high or low statistic taken out before the Fed rate thing. Wouldn't surprise me. In fact, nothing would surprise me. I'd try not to do any more than anticipate based on what I'm seeing. And I will say at this point that one of the big benefits I find, psychological for sure, about vetting a trade and trading the vetted trade, vetting a setup and then only trading it, is nothing is a big hurry, surprise, oh my God, you anticipate like, okay, what's happening? Well, we're coming up here. We're approaching the IB high. We've traded low. We're trading back up. So are we going to get that out, man? You start to watch. Do we get the first signal? Yeah or no? Do we get the second signal? Yes or no? Then at what point? Then what do you do? Well, I have a workflow for that. When we're up, when the first signal has been achieved, I reconfirm, run through my checklist. Are the multi-brackets configured properly? Is the chart blue boy on the job and all those kind of things? And then when we get to T2, in anticipation of T2, I make some changes where I widen out the price ladder. I mute out the noise in the background, and eventually throw on 1 minute candles so that I can see exactly how the context is unfolding within the 1 minute bar, because that's how the rules are written for those signals. Otherwise, I wouldn't have to do that. And I don't know of any other way to do it looking at bookmap than what I just said. But nothing's a surprise. You just sitting in. If you get the trigger, boom, you get in the trade. If you don't get in there. Simple. I mean, simple, but clear, straightforward. systematically. And as I believe this is the key to, it seems to be the approach that all the most successful traders in the world follow, that of probability, and some more than others, more of a, systematic approach. I'm sure that there's a lot of discretion involved in what Tom Sosnoff does. There's no discretion involved in what Renaissance Technology does. So, or at least very limited, shall we shut this thing off? Shall we let it continue to trade? And in what I've done here in order to trade, this is just my approach. What I've done, when I am doing and believe, is that I will trade exactly what the rules are for the trade, because otherwise you've just thrown all the work you do for the back testing out the window. Are we going to get the IB high here? No, that didn't work. Son of a bitch. Now, I don't know how that B, I don't know how this B could be signaling here. That was the whole point of what I've spent all this time on. With all of these being, well, okay. Back to the drawing board. I guess I know what I'll be doing tonight. God darn it. I had that pretty well thought out. Oh well, shit happens. It happens, doesn't it? I know what that has to say, but I don't want to want to monkey with it right now. Oh, how nice of them to go the other way. Now I don't get to get all nervous here. Monkey Boy was all excited. Let me see how I would do that. I don't know if that's true. Oh, it is. Okay, that's what I've got to do. Okay. All right, I fixed that code, so I mean, I know what to do now. Okay. Now we'll see if it gets the signal. I don't know how to write. Broke it somehow. Yeah, didn't think of that last night. Well, God damn it. I don't know why this mouse is doing that. Yeah. Well, Hey, Panda, did you come to say hi? Yeah, did you say hi? Okay. Oh, isn't it nice how they're being nice to the old guy? Look at there. Well, they are making a stellar batch of retail soup today, huh? Now are we going to get that IB statistic? Look at us go down there, getting all excited now, getting everybody shook up. So what I will start to do now is what I said I was going to do, which is I'm going to take the IB stat here from the looks of things. So the first thing I'm going to do at this point is try to get this damn thing to work. Candlesticks. Close that off and make them 1 minute. Why do I do that? Because as I said before, and widen this out, the close matters. And now this is the reason I have to use the candlesticks is I need to know what happened first in the case of two signals on the same bar. And you see how last price, this is the candlestick for this data. So if the rule was something like the low happened before the high, it wouldn't be, this wouldn't work. But you don't know that by just looking at a candlestick. You only, unless you're sitting here focused tightly on the candle and watching it develop. And I can't tell with the last price line, you know, I need to know, the only other way that I can divide this up in 1 minute increments is to throw the vertical line on it at 1 minute. Well, that's got crap going all over the screen, and so I don't do that. Here we are, you know, here's my thinking. Yeah, if anybody has a better idea or a, you know, let me know. I, short of just, you know, like I said earlier in the game here, short of just nuking forgetting about Bookmap and going, I mean, everything's happening over here. It clears a freaking bell, right? In IRT. And I can buy market and sell and do all this kind of things in IRT, assuming that I send these to the live broker. So I'm kind of on the fence at this moment about that. I need to rationally assess whether my my tendency to keep Bookmap and to keep focusing on Bookmap over here is because it helps, or because it's a crutch, or because I'm used to it, or you know what I mean. This is not about what fancy this or that you got. If I could trade successfully and had a strategy around Jigsaw, that's what I should be using. Yeah, if you know what I mean. And that's where you gotta, you know, at Monkey Boy can come and mess with your ass on many levels. So, not just, what I mean by that is not just FOMO or, you know, chasing or revenge or stuff like that. You know, the need to be right. You know, am I... Oh, hi, Panda. Are you going to help Debbie? Do we keep Bookmap? Huh? Oh, okay. We'll keep Bookmap. Got it. Oh, okay. If you're nuts, don't get rid of it. So, yeah, I mean, when you stop and think about it, except for the levels, now if I if I do this, what have I got? I've got the price levels, I've got 1 minute candlesticks, volume profile, session prices, and the trade levels, right? And then, you know, mid and blah, blah, blah. What have I got? Well, I've got volume profile. I've got the session prices. I have a lot of the session prices off over here just to clean up the, you know, not to be confuse the issue. But there's the developing volume profile and the VPOC and the POC. I can put all the rest of them on there, no problem. I don't know, yeah. And another thing that I like, which is unfortunate, Bookmap only does candlesticks. I don't like them. There is absolutely no question where the open is and where the close is quickly to me than a bar chart. I have to think about, okay, the up is this white, and you know, so here's the open and here's the close and here's the open and here's the close. Okay, I got it. But it's real clear without even thinking about it over here what's going on to me. And that's, you know, that's who's doing this here. That's why it's important. Here we are on one of those damn ledges again, which I hate, right at the mid or the VWAP. Oh, why does it keep doing that? Don't tell it to do that. I can't believe if I've actually sorted sorted out the RTH. That worked perfectly for years. They restarted this column, and then about, I don't know, a couple of 3 months ago, all of a sudden it went pear-shaped, and nobody could figure it out. I've sent log files to Bookmap, blah, blah, blah. But it seems like maybe it's sorted now. Maybe I was able to figure it out by just tweaking the session start time 15 seconds and, you know. And I don't care if it works. I don't want to think about it past right now. So we're at a minute. Now we don't need to be at a minute anymore at the moment. Let's get Blue Boy back on a job here. And what is this? What are we doing? What would you say the context is so far this morning? Boom bitty boom bitty boom bitty boom bitty boom bitty. Rotational. Retail soup. They got them lined up over there ahead of the top of the blender, and they're just diving in. And I'm sure there's plenty of them, plenty of you all out there that got long down here and short up here, and long down here and short up here, and long down here, and who knows what's going to happen up here. And good for you. That is really, and I mean that sincerely. If your trading is no more method driven than, just getting on the right side of some swings like that in a balanced day and basically, well, those aren't scalps exactly because they're 10 points or more. No, this would be a 2-lot. If you got long down here, you've got yourself a 12-point swing, which is T1, T2 in my risk neutral methodology. If you can do that, super. And not think about it past, the market closed, you just go to bed and forget about it and do that the next day. That's really cool. What I believe needs to be very, very aware of is that those discretionary tendencies don't start, well, my stop is here. A couple of more ticks is no problem. That kind of thing, I think, is a recipe for disaster, but that's my opinion. And this rigid bracket trading idea doesn't necessarily carry over to those successful traders that I reference frequently, who understand that this is a game of probabilities. Like there was an interview I heard of the CEO of Renaissance now that took over after Jim Simmons, and he was talking about when they had a pretty big drawdown. Well, if you've got stops in, you can't have a big drawdown. No. So they weren't trading some sort of a fixed bracket like that, apparently. And they don't, apparently. They turned out, ended up making millions of dollars in a week or something like that, whatever the story went. But, and all those things, in addition to the law of large numbers, all those things change based on account size, right? So size up, scale up. Don't give up the fight. Sound like Marley, huh? This is the way I'm approaching it right now with my goal to manage and preserve my account, manage my risk, and support the family. And I'm so pleased that these traders are just grinding these retail folks up, going back and forth, and I haven't had to make the decision about whether I would take a signaled trade or not, because I haven't had one. Here we are. Nobody left on third, huh? As we approach the holidays, closer and closer, the more volatile, the less volume. Several folks, one or two guys anyway, so far in static, or while I'm off them until the first of the year, they watching and narrating and participating but not trading live. Here we go now again, getting up here where we could take an IB statistic out. Let's wind her out to 1. Maybe I'm just winging these, right? Let's get 1 out there. Okay, so if we close up here, if we close above this initial balance, this candle, it will be an A signal. And it has not yet. The rule is open below, close above the initial balance, and the preceding bar has a higher close than an open. We don't have a signal. Now, here is a problem. Well, not a problem, but this is the kind of thing that brings question in my mind. There is an A setting up what looks to be on Bookmap. Over here we have an A because it closed on the IB, but that did not happen in Bookmap. How the hell did that work? I suppose it has to do with when the candles started plotting. Jesus Christ. We're going to have an A right here pretty quick, though, because the open is below the IB. The close is likely to be above it. And another, there you go. Yeah, the close is above it. So that is a bona fide A signal. But you see how far that is off? From IRT, son of a buck. Well, yeah. There's the A signal. We don't have a B signal or anything yet. Okay, so, but that clearly, and actually this isn't either. Because the open has got to be below the initial balance, as it is here. I did change this signal to be equal to or greater than on the close. So, because I got tired of seeing a lot of times this would happen. So I'm trying it out. But now the question about Bookmap, no signal here. signal here. Way out of sequence time-wise on a 1 minute chart. Shit. Sorry. I really like the idea of having a vetted system that's automatic, that, you know, algorithmic, and then I just go to the beach and have a lot of fun and come back and, as Tom refers to that, you got an ATM in the basement. Yeah, it'd be cool, huh? And I don't have the no dreams about that. Okay, so where signals are starting to fire here, and if I were doing the normal thing, I would do my checklist right now. I got both on. I've got the IB, the minimum risk neutral trades set up. I can trade. We've got both going. I'm back off the. Fortunately, there has not been a B signal on either system. I know exactly how to fix those rules. That's pretty cool that I figured that out, though, by golly. That is pretty cool. Now, the problem is, well, not a problem, but the possibilities are that we get a continuation signal and then a pullback, which I talked about yesterday, and this is I'm going to have to think long and hard about this, but my feeling here is that I need to put a filter in, a trading rule in, for context. And it's easily seen over here. You know the definition of the initial balance failure and continuation trade, and that's a rotational day. If you get a signal up here for an IB continuation trade, does that sound like a good idea to take? Now, I don't know whether this is Monkey Boy kicking in. I talked about it yesterday too. I recognized this yesterday. And of course, I'm aware of the fact that it is going to be rotational until it's not anymore. And maybe, hopefully, this won't be a problem that I won't have to even think about. Let's see how they trade it. But that's something that I need to think about for sure. And I know that, sticking to the process and the procedure is important, but then also there needs to be guardrails around the process and the procedure, so you just don't stand there like a bird on a wire and, watch the semi-truck driving down a road till it runs over you. So that's, that's that. What's the stat for the overnight high? That might be pretty funny. Where are you? .7% probability. Okay. So there's a 31.7% probability. Ooh, what's going on? .7% probability in this open type that we're going to take that IB high. Oops. Well, I can't tell you. I can't tell you how sweet it would be to have one program, one software package that has what you need on it, and back and forth and up and down, and screens this and monitors that, and you know what I mean. I'm really pretty happy that they didn't get that target or that B signal. That's cool. I have to say that once upon a time in KL, before we moved here, I've been through several softwares. Started out with IRT in market profile. Well, before that was Cyber Trader. See if any of you are old enough to remember that. Anyway, then Sierra Chart, then Jigsaw, then IRT some more. And I bumped into Tradeovate long before it was purchased by Ninja. Oh, a Ninja Trader. I forgot about that early on. I forgot. Now here we could be in a B signal. There's a B. Will it go down for the trigger? And would I have to take, would I take along? Anyway, Tradeovate, before it was purchased by Ninja Trader, straight up futures trading, before I knew about really in depth about, vetting trades and probabilities, and I had a few setups that worked out pretty well most of the time. That was a pleasure, man. Had volume profile and Renko bars and was funded with Top Step. You know what I mean? This doesn't have to be a space shot. I don't think. And then you see whether it's true or not is some good-looking gal and sitting at a picnic table with her laptop and making $1 zillion a minute or some horseshit like that. Who knows? So we don't have a B trade now. Okay, because we didn't. Now here's another issue. Here's another problem with IRT. This candle closed down here like a doji. In Bookmap, this is a signal for the B. Right there. And I don't know what to say about that. These are 1 minute bars. These are 1 minute bars. Boy, howdy, I don't know. Shit, man. Yeah. Again with the close up there and not so on IRT. Right there. Oh, this would not be the signal, but this would have been. And this would have been. This closed lower than it opened, right? Because here we go, the down candles again, and I wish they did bars. And this would be a signal. This would be a trigger if it touches there. Don't have a B on IRT, so the system should not fire trade. Oh boy. Well, that's pretty interesting. And I guess I should reiterate that this these signals, which I'm just trying to get lined out, I've got pretty well now, except for the triggers lined out to be sequential, have nothing to do with the rules being evaluated by the computer every 15 seconds, which would fire a trade or not. This is only for visual confirmation. And I hope that's helpful, not confusing. Well, hell. And now I'm hopeful that they just keep doing this all morning and I don't have to worry about it. I am definitely torn between, do I stick to my original thesis that when a trade fires, take it? I think it has done so. Yes, it has done so on the wherever that's called. So something's wrong. I've got my A and my B signals just mixed up somehow or another. There's the trade, and we haven't got a B yet, an A yet. So somehow I've got these backwards, so that I didn't get that B signal. The system, and I need to confirm that changes I might have made, like the close needs to be up here. Maybe I might have changed it to the I, be the first to apologize. I try to be real methodical and make one change at a time, and remember that it's got to change on the signal as well as the rule. But, well, we're in a trade over there and not over here, and there's no likelihood that it's going to be, so there you go. This trade, I will enter this trade into the system for scaling up or whatever. Well, no, I won't, because it's not taken live. Never mind. And we could get up here and punch this out, get to value area high, take the POC, and who the hell knows? Remember that all that needs to happen up here is to get up around this area, and it's a risk neutral scale, and then helmet on, feet up, and away you go. Where am I? What am I doing? I don't know. Who's on third? Gonna get that. It looks like we're gonna get a T1 here for too long. So, I need to get those signals straightened out if I'm gonna be taking them. Okay, we got T1 on the system over here. There's T1 right there. I think. Entry T1. Now it's risk neutral, right? So, Yahoo Buckaroo. Kansas City, Powder River, let her rip. Powder River, let her buck. That's actually how it goes. Huh. See if that, while I'm busy standing here thinking, let's see what the let's see what that B signal, ABC long B signal right there, I think. Yeah. The signal's close is greater than the high, right? See that? And then the respective wait a minute. Yeah. So what I need to do is now, which I'm probably not going to do now. Well, I guess I can. What the hell? Why not? We can look at what that B signal would be over here, these are the actual rules. Okay. So that's an IBC long. Where'd you go? IBC long rule. Yeah. See here? The high is greater than. So that's the difference. That's why the signal fired. Now I need to scratch my old head and decide whether I want to change this back to the close or whether I want to change the signal to the high. Oh, the joy of trading. The magic. And you might be thinking, well, what a dummy. Why didn't you just make them the same? Actually, they started that way. They started by each rule being saved as a signal, so they were identical. But as this has progressed, guess what? And I suppose the setup for the rules is pretty complicated because you got to change the standoff and the size of the signal and all that stuff. Never mind. It's easier. It's just easier to keep it up this way as long as I remember to do that. Oh, look here. Remember that this is entry T1, pretty quick going to be stopperoonie, going to be scratch. And we've determined just a second ago that it was based on that right there being the B. Within the system, not the signal markers over here. I'll get that worked out this weekend. I want to get it worked out because some of the folks that are using this stuff I'm sure it's confusing. Stop and think about it. It confuses me, and I built it. There's the stop out on the signals from the trading system. Right there. Scratch. Entry T1 scratch. Oh shit. Sorry about that. There you are. Entry T1 scratch. Why didn't... Okay, I gotta make sure that these resets. Okay. I think in order to prevent a potential error, an unforced error, I'm going to undo the trade control panel. I'm going to disable it like that, because accidentally clicking over here, I won't ever make an accident on the dome, right? But I can assure you that more than one time previously, some months before I started actually trading with the mouse consistently, I'd try to grab a line and move it, or a target or something, be on the wrong side of this thing, or, fat fingers, something, and be in a trade. So I'm going to disable that and watch what happens here. And I approach this stuff as like that as risk management. I have prevented the possibility of unexpected risk from my side. Unintended, maybe a better way to put it. suppose if I wanted to be real industrious, I could be trying to straighten out these signals as we go. Over here. I guess. Sorry if I was chewing in your ear there. So let me see what I got going on here. Okay. Why isn't it happening over there? Okay. Wait a minute now. Crazy. Well, this isn't a whole lot of fun, is it? But what the hell is the beeping about? I'm not gonna keep screwing with this thing. I'm on the right track and I'm making headway, so there you go. And in a noisy bar in Avalon, I tried to call you. Well, here we are. Isn't this fun? Fading magic. Welcome to the stream. Thanks for joining. Thumbs up, like, subscribe. Drop something in the chat. Hey, Ron. Keep your powder dry today, my brother. The FOMC big awaited rate decisions at 1300. So, at this moment, I have disabled my trade control panel to avoid some mistake. The system did take one trade, but differently than I had in the signals, and it's a scratch. So and I elected early on, before anything happened, before the IB statistic was put in, I would not trade, even though a system fires, that I wouldn't take the trade live because of this Fed story. I think I have to have some sort of a criteria there, whether it's even just like a button, context button or report button or something like that, that prohibits trade if I don't think that should be the case. Because the system is only looking at the three rules, having nothing to do with context or the greater, the greater good or the bigger picture. That's something I need to deal with over the weekend, and I'm getting my signals lined out here so that not a million things all firing all over the place. I got to get the triggers and the B's and the stuff, so that's good. Some changes I made last night that need tweaking. Cold what? Hey, yeah, here we are, boy. Boy, oh boy. Oh. Well, lots of conversation here this morning about the Fed rate decision and all that. What is the decision? What's the thinking after the Fed rate decision? What the hell will I do? Yes. Well, by the way, Ron, I guess you know that margins are pumped way up to 25% rather than the usual because of this Fed thing, depending on who your broker is. But that's what AMP does. I assume everybody else follows suit. And a few minutes after the meeting, then they'll send out an email that margins are restored. That means so from 1:30, and then there'll be the conversation and the minutes and all that stuff in the Q&A. 1, 2, maybe over by about 2. I think that probably, as far as I'm concerned, this will be a hands off the trigger button for me today. I think I can't. The decision's at 1300, and then there's about an hour of Q&A and those kind of things. That's 2 o'clock. Does it make sense to me to try to engage with the market and jump all around? Well, that's if you're trading a live account, then you should have been notified by your broker. I was. I mean, hold on. Somewhere around here I actually have that. Yeah. There you go. There you go. Ah, damn it. There you go. They send this out, and this is, let me point out to you that this 25% increase started at RTH Open last night. This is not some increased margin requirement just before the report, right? This started at 1700 last night, and this is the way they do it every time. And somewhere around here I have the copy of what it is, but it's oh wait, I know where I have it. Hold on. I think I have it over here. Yeah, there you go. Here you are. So the E-minis, rather than $440 or $594, half. And for the minis, it's $5,945 per contract. So not such a big drama with micros, but you could be from $800 to $13,000, $12,000 to trade a 2-lot. That could be a pretty. That could, have an impact on the trading. These are the new release dates following the 25 lapse in appropriations. In other words, all of that stupidness about closing the government. You want to do a copy of that. It's also at AMP futures news, margin changes. You can do whatever you want to do, and I'm sure your broker is saying the same thing, or I hope so. So I will likely not be trading. I'll continue to monitor this. I'm happy with the progress I made with having these signals fire sequentially as they do for the system. And it entered another trade over here. Look at there. Here's another one. What is this one now? This is a pullback. And I don't see how that worked. Oh yeah, here's the close. And there's the trigger. That makes a little more sense, but how much meat is there on the bone? Where are you going? Here's the trigger. And here's the POC. Well, it is just barely a risk neutral scale. So the range requirement is out the window for me. And I'd be the first to suggest to anybody that's listening to this, this is one trading day out of a whole bunch of them, you know. This might be one where you go, you know, catch up on your nap or chase your partner around the bed or whatever the hell it is, go mow the lawn, something. And having said that, you know as well as I do, a bunch of rearview mirror guys are touting how clever they were to take this long, short, whatever, you know? And I hope that's true for me, you know, for them and you, if that's what you're doing. Well, no, they do that. There are 4 releases. No, wait a minute. They do that each and every time. There is, each and every time there are one of these reports, which are right there. PPI, non-farm payroll, FOMC meeting. Those 4, they change the margins every time. So it's not, you know, some premonition about some super duper thing that's going to happen today, but this is as with everything we should do in trading, it should be systematic and methodical, I believe. And I suppose you can probably put this into your, flap this into your Outlook somehow or another. But, and again, you know, if you want to look into it further, you can check this one out, whatever you want to do. But these rates only increase CPI, PPI, non-farm payroll, and FOMC. In other words, those known risks that we have scheduled well in advance, months and years in advance, as opposed to random critical risk that's unidentified, like this mess over here. That's the part that scares me. I mean, I'm not worried about scheduled stuff upside down, backwards, or forwards, you know. It's coming in advance. If you've got a plan for it and you have a risk mitigation strategy around it and you've properly vetted that strategy, trade the hell out of it. If you don't, you know, unless you're suicidal or something, or you just want to lose your account because that feels good, don't do that. It's simple. I think it's so simple. So, you know, logical. So that's where it's at. I mean, that's it in a nutshell, right? And I'm pretty pleased that what's happening over here with this trade that they got into. Well, it's scaled. This is an IB failure now. This was an IB continuation. This is an IB failure. There's the entry. It's scaled, so risk neutral. Same thing happened yesterday. We had 2 scratches in a row. I'm not saying this is going to be a scratch, but I can tell you that that does not meet the range requirement that I've got. And these are the nuances that I need to start figuring out how to work into the system during the homework period so that they become a applied, you know, rule or criteria. And, you know, again, changing your trade plan, making shit up during the live trading sessions, a bad idea. And I admit I'm partially guilty of it by deciding that I was going to step away and not follow through with my commitment to take every signal that's fired. Because when I thought about that, I didn't think about, non-farm. Well, I thought about non-farm, I wouldn't be involved. I didn't think about FOMC. I'm thinking the idea of a no trade button to do with whatever, whether it's and I realize that's discretionary, to do with context, or in the case of this, meeting, release or something. Something I'll have to think about this weekend while I'm doing my work. In the meantime, let's mosey over here and see what's happening. Whoa, what do you suppose they're doing here? Oh, they're grinding up retail, making soup right, left, and center. Hey, little panda, what's up? Well, they did take out the POC, so here we go. Ooh, that doesn't look right. Come on. God damn it. I don't know, it's my eyes or the mice, or I'm going to blame it on the mouse. This is easier. Sounds better than me. There's something wrong with me. Everybody in the band's out of step but me. He has to check and make sure there's a proper amount of hair all over my clothes. Well, what else is happening here? Okay. I am going to definitely get out for a walk here, get some exercise, rest my eyes, eat my dog food. You know, take my own advice. And be back well ahead of Jerome when the Jerome band takes the stand. What's happening here? I think I'm in a trade or something, isn't it? Yeah. In a scratch going on. In a scratch going on. Not something I would take, as I discussed, on the live account because of the range, you know. Then we got 3 points from the trigger to the POC. And maybe that's just could possibly be just my prejudiced about stuff like that, you know, but for so many years I heard about don't diddle in the middle and all those kind of things, and then I really buy into and I find the range requirement to be a real valid way to look at things. And so here we go. Well, well. Let's have a look at what this signal does. What else have we got to do here? I think I know how to deal with this. Oh, I don't quite understand that. What's going on with the... This is the primary signal, and then 383 would be the maintains what it was before, so you know if it changed. And here's 183 is 0, which just means this is going to fire. But 183, oh, 383 is 0 over here too. Okay, I'm looking at force. Never mind. What? Okay. So I don't know. I'm not going to do that today. I don't want to screw something up that I'm not doing, you know, in sequence, and when I'm thinking about doing that, the way I do these, if you're curious, I will just go down each one of these rules and change the rule and the corresponding signal at once. And that's the way to do it. Ah. That's the reason I've got all this stuff up here, so I can see what the VPOC variable flags are doing and when. Because I'm not a whiz bang like Rod or somebody. A code and commando. First time I tried to do any code was on a TI-99 with BASIC. That'll tell you something. Oh, I can tell you exactly when that was. That was 50 years ago, because I was doing something. I was making a program for my son, who's now 53, and yeah, that's about what that is. Time passes fast when you're having fun, boys and girls. I'll tell you. Life is what happens while you're making other plans. You got to make the best of what you're doing every day. Every day you wake up. That's my advice. I have no designs or expectations for this trade doing anything. I'm not in either one of them. This was a scratch. IB continuation. This is an IB failure. Scratch. And I have no designs that anything's going to happen between now and the Fed coming out, and maybe they'll rotate it down here and it'll get the targets. I don't know, but I'm not in it, and I'm not in them for a reason. Anytime that the margins have been raised to 25%, I think it's going to be a fair reason for me to stand aside. So here we go. Quarter 2, 22. Do I walk? Do I sleep? Here's where I get into a big dilemma. I'm standing here thinking, well, yeah, that's a great day. I'm going to get my exercise, eat my dog food, get 3 or 4 miles in while it's the lunch hour. And then I have a nice big piece of toast, homemade sourdough toast with butter and peanut butter, and then that kicks in and the coma hits, and I'm thinking, yeah, I think I'm going to walk right into bed and take a nap. So I have to assess which walk is going to win. Huh? That's what I have to do now. Either way, I want to be back here bright and early before 1300. Hi, Panda. Hey, girl. What are you doing? Hmm? Are you saying that? We're taking a nap? Is that what you're saying? Could you please say that? Because that would be great. Yeah. Yeah. Oh, we're going to get our T2 here. Look at us go. What are we watching? Okay. There you go. If you're curious to see what happens. This is just, it's like porno. It doesn't, loses a lot in the translation, I guess. I prefer to do the real deal. Mom. Well, we're sneaking right up on an hour to the big event. I think I'm going to, what am I going to do? Well, I'm going to do one or the other, but I'm going to be back. Whichever one it is I do, I'm going to be back in an hour. Whether I'm checking my eyelids for leaks or heading down the street. Because I definitely want to be here for the fireworks in advance. So, this kind of market, my suggestion is get outside, rest your eyes, don't be squinting at the screen all morning, get some natural light, do something healthy, get some fresh air, get out of your grandma's basement in your underwear, whatever you're doing, and get back for the main event. I don't think, just standing here, it doesn't make any sense that I would be trying to take a trade after the announcement, because it'll be a period of time before the margins roll back. Not that would matter with what I'm doing, but trading the micros, 2 micros, but and also after the announcement and that big shock or stimulus, potential disruption to the market, to the auction, let's call it. Then we have the Q&A in the session with Powell, which is always can have some market moving things in and of itself. His attitude about, the way he might say something like, "Oh, I don't think it's a given," or whatever else. They hang on every word he says. So I can't really imagine that I would be taking a trade in the power hour. But, stranger things have happened. So I'm going to sign off here and go get that walk in or that snooze in, whichever way I turn when I go out the office door, right or left. Yeah. Can't think of anything. I'll leave the book map on as normal. Here we are. It's a scratch. I would fully expect it to stop. Well, a stop would take it up here. I would, wouldn't be at all surprised if we stop here pretty quick. Let's see. And that's exactly why I didn't take the trade. There wasn't enough meat on the bone to get anywhere. But I talked enough about how I need to. The next step now is to pre-program some context rules around this system. We'll kind of watch and see if we stop out here. One more pop here and we should be out the door. I never remember that in the regular trading book map stuff, I never changed the stops ever at all, other than to trail up, never away from entry. And certainly this is a backtest system, which is purely discretionary. The computer is doing the driving, not me. And here's our stop coming right in here now. Bam. When that bar closes, I'm sure we'll get that. I'm sure we will get the stop out. Very definitely. Very definitely. There you are. And there you are. And there's the stop. So we're flat. Let's see if everybody goes flat up here like they're supposed to. And there you are. Well, let me guess. They didn't raise rates. They raised them. Okay, now I still don't have an email here about the margin. Okay. Not quite the the big pop that it could have been. Just got the email. The margins are now rolled back. Not that that means anything about what I'm doing, but you know, that's interesting that that works that way. It's pretty cool. Well, now what? That was a pretty good pop. 30 handles or so, 20. No, wait. 47.57. Yes, 30 analysts. What happened to buy the rumor, sell the news, or however that? I always get that backwards. I guess maybe it was a sell the rumor, buy the news. I guess I don't know. I never get that right. Never get it right. I guess. Boy, every time something comes up about Epstein, hey, we gotta hurry up and do something, man. Misdirection, right? So now we've seized an oil tanker off the coast of Venezuela. That's, what a coincidence. Like ships don't constantly come across the Caribbean to the Panama Canal from Europe, from Asia, or from the Straits of Gibraltar, or from Africa. Wow. Pretty crazy. Pretty crazy stuff. Oh, and this guy's participating in a round table, so we got double trouble here. Double trouble. Wow. Here they go. You got short, you're happy. What's going on with it? I wonder what the hell is going on over here. I've never watched the system over something like this. Pretty quick, they'll be back to the scene of the crime. That's just about as usual as always. And I'll bet you there's a lot of rear view mirrors that got long right here and shorted the top, shorted that one. I would expect. Boy, boy. Back to the scene of the crime yet? Oh, almost. And this thing took a... I gotta look at these. I've got to look at these rules because something seems pretty wackadoodle over here. I may turn out to be a fantastic trade, but that doesn't seem right. I've probably got something out of whack here. That's okay. I've done my statistics pretty much with this, and I'm at a lot more liberty to try this stuff. Obviously, the T1 is taken so far, and now it's heading up to who knows where. T2 here pretty quick, I guess. All still based on Brother Powell's testimony, I would assume. And there's T2. T1, T2, trades over. Well, these things are fun to watch, but these are not things that I believe are correct to trade within my wheelhouse anyway. Bet the volume picked up, what do you bet? No, not much, man. We're only up to 61%, but look at what's happened to the ATR there for a second. It got up around 8, now it's 5 1/4. That's a good time to get your ass spanked. They're ripping it again. Okay, so that one worked that way correctly. What I don't have is the reset of that. Oh, there you are. Huh. Okay. I'm gonna do this. I'm gonna do this at night when there's when the market's not moving. It's taking too much effort to look at this stuff. Plus, it's interesting to see what we're doing here. Thank you so much. Back into the scene the crime began. That you can bet that dumps him. Has not been friendly to folks. So here's something to think about while I'm just standing around here watching this stuff. Anybody's listening or not? I don't regret at all my decision not to actually follow through with these trades as being tested on the system today with the Fed thing. And here we have an example. This is and this is kind of bears out that I didn't make a big mistake. Scratch, stop to both targets. Now, you could rationalize that. Well, you trail this, you move this target out, and you trailed up to get more profit out of it. But assuming not, this would be net now would be about 36 ticks, and put your account at risk 1, 2, 3, 4 times. I don't think that's good. I don't think that's a good idea. What is it? 60 miles. Yeah, 36 ticks. Not much reward for the potential risk. I don't know if that's the right way to look at it or not, but that's how I'm looking at it. You're still, if you got on the right side of this rotational thing, you're just, it's just completely ridiculous. But yeah, somebody thinks they did that. There's no reason that this should be that. Somewhere, something set 82 incorrectly. I'll have to go through every rule and see which one it is. Well, they're really getting crazy now. He must have said something good, I guess. Pretty quick the power hour cometh. Well, that has never been. Man, look at it go. Yeah. Really rocking now, eh? And coming into 2 o'clock, so those are the kind of things. Yeah. Okay, the power hour is upon us here. Jesus. Yeah, so just watching this craziness here around the Fed decision. I don't know if Powell's even too talking. I haven't looked. I've just been kind of cruising over here. Let's take a little look-see around the mulberry bush and see what we're up to. Oh, and of course Trump is doing something at the same time. I forgot about that. Round table. Well, and then he's gonna have another thing at 4. And Powell's still speaking according to this. So I'm definitely just moseying along watching this thing. Oh, I have a hard time looking at that guy. Okay. I don't. I suppose it's more interesting to just watch this market move than it is to think about backtesting. Okay, so I'll just quickly do the backtest thing here, I guess. And be looking for the bottom of the hour for a quick recap, and then into the market on close imbalance and the cash close and stream into the stream. So I suppose if a few people that are here, if anyone now, is a I'm trading this. My trading here in this stream is based on my conviction that the only way to properly trade as a business is one of statistics, probabilities, and you identify a pattern that's going to happen frequently, and the specifics criteria that validate an entry for that, and then you capture a statistically significant data set of that setup and determine if it has a positive edge. You do all of this away from the live market. If it does, then you take every instance of that trade that presents itself in the live market or that setup, and you rely on the law of large numbers to manifest to your bank account. It is the business model. It's not something I just, no epiphany on my part. It's it is what the most successful hedge funds and traders in the world ever, historically, have determined. They all came to that same conclusion. And I'm talking about Jim Simmons, Ray Dalio, Paul Tudor Jones, Tom Sosnoff, Tom the Trader, Mark Douglas. Just tick them off. Also, it is the business model of a casino from the point of view of the house. That should tell you something. They only play games which have a positive edge that has been determined away from the casino floor. Then they put the game on the floor, and their only mission in life is to play the game as many times as they can in 24 hours. That's why there's no emotion. That's why the dealers and those guys could care less. Their only mission is, okay, stop clapping, you're a good boy, have a drink, let's deal the hand. That's all there is to it, because they know the law of large numbers will manifest the edge to their bottom line. So, my method of doing that, establishing that edge, is I determined that I would vet the initial balance trades, of which there are two. There's initial balance long off the high, which is an IBC continuation and a failure, and there's a continuation and a failure off the IB low. And I've coded up that system, and I'm able to backtest it. Now, I've also sent it to the chart since December started. And these are the trades that the system has taken today in a SIM account within IRT, because I don't want IRT sending trades to my broker, which is AMP Futures, funded by my money. And I trade them, I take when there's a trade triggered on the system, in a normal day. Today I was off of it, and I said so at the pre-market. I take the trade without hesitation, live in Bookmap. And I have, go back on any stream you want to, and you can watch. So how do you backtest something and have it be a valid statistic? First of all, everything, you can try to do it manually, but I was not able to accomplish that because all of the parameters must be exactly the same. In my case, I'm using the risk-neutral two-lot package that I talk about in the pre-market. 3-point stop, 3-point T1, 12-point T2. They have to be identical every time for every trade, and you can't change them in the trade ever. Or that's not part of the data set to establish the statistics. So what's the best way to do that? Write the rules exactly as you think they should be and have the computer do it. Believe me, no discretion in the computer. This is 15 seconds, every 15-second bar. The computer validates every one of these rules. Every 15-second bar, however far back you haven't looked for a backtest. You can scroll, and you imagine scrolling back. Typically, I backtest 500 days. Can you imagine scrolling back a day at a time and making sure that this trigger is exactly where it's supposed to be, and that rule is fires exactly where it's supposed to be? It was overpowering for me. That's why I focused on doing this. The way you do it within Bookmap, and I hope this doesn't break anything. Let's say 495. Okay. I'm trying to keep it within 2024. MES, RTH session only. These are the reports I want to see. Okay. How long do you think it would take you to go back every day, every trading day, and look at every 15-second bar to analyze all of these rules? It takes the system. It takes it 6 seconds, and it looks at 490 days. It evaluated 221,740 bars. And these are the results of the setup, the way the rules are written over here. 1,300,000 bucks, so many long, so many short, 1,080 trades. Imagine scrolling back through these charts and picking up 1,080 trades absolutely identical. The rules all met identically, not a little here, fudge over there, something else. Well, anyway. And then you can look at it this way, which is there's the largest losing trade, the average loser, largest winning trade, the average winner. Out of that many trades, we had 320 wins, 291 losses, 2.29 R factor. And the win rate's a little bit misleading because IRT divides the win rate, winning trades, by the number of trades because it was designed without consideration for multiple targets scaling out, which is what I do. So if you stop and look at it, there's 320 and 291, so that's 500 and 610, 611 trades, right? And there's 1,008, so there's about 400 trades that are scratch. That's one loss and that's one win and one stop. So what I think, the way I prefer to do it is back the scratches out, and then you divide the total number of winners and losers, which is whatever I said it was, 611. You divide the 320 by the total number of trades minus the scratches, say 611, and you get around 50 or 60% win rate. 10 consecutive winners in a row, 8 consecutive losers, and if you, as part of doing this, you very definitely should. This is each trade. Now, if you want to scroll back and verify this on each trade, you can certainly do so, but here's your list of trades. You know that on the January 16th of 2024, you got long this entry type and you got stopped out right there. And you can do that for all 1,008 of them, or however many trades there were. Now you know how, now you have some statistics. You know your win rate, you know your R factor, you know your risk to reward. Now you can make a meaningful decision about whether this has an expectancy and whether you should trade it. That's backtesting and the way I believe it should be done. Which takes us to just some example. Boy, this is irritating. Some examples here. These are all of the back tests. Now this is filtered, okay? Oh no, these are the live trades, I'm sorry. These are the back tests that I've taken here. There's 72 of them. Every one of these is as you just saw. 480 days, 1,015 trades, winners, losers, loss, average loss, scratch, win rate, loss rate, expectancy, R factor, risk to reward, profit factor, trades per day, consecutive winners, losers, short, long, including standard deviation, returns, Sharpe ratio, Sortino, you know, as many numbers and stuff as you want to come up with there that convince yourself of which one of these things you want to take. I also do this one where every trade, including yesterday, is entered here. Exactly. And I have a running, this is a tool that I use to size up or size down. And this is the only way I can see to, you know, logically and rationally and systematically do that. So my premise is that I'm trading the risk neutral 2-lot package in both the micro and the mini, which is what I do. I am going to trade the micros until I have 1.33 times the P&L in ticks of a mini stop. When that is reached, I immediately switch to the minis. That's the way I think, and that's the way I'm comfortable doing it. And it's not my way or the highway. This is my journal, and this is for my journal's record. If it's, you know, makes sense to you, super. If you have a strategy with the 2 lots that you want to backtest, let me know. Happy to do it. So there we go. And we've already rounded the corner. Holy smokes. So let's look at the recap for the day. Well, if I have to tell you that it was a Fed day, I hope it was comfortable living into that rock of yours over there. It was, you know, butt quiet for hours until the Fed at 1300, and then look out below, the zoom. Up we went. With it's still trading, so it doesn't want to do this very well, but you can see what happened. Here we were, and then there we go. Now, perhaps a better view. We're a ways away from the all-time high, but not too far. And this exuberance right here took us outside this micro composite. So far, it's still within it, and price is still overlapping. So this will be part of the micro composite for that I'll be doing tomorrow. Now, the way it works is real simple. This is a micro composite chart, RTH session only, daily candlestick. Wherever price overlaps, I pull this volume profile around it. I get a micro composite VPOC, high and low nodes. The high and low nodes are pushed automatically to bookmap. I enter the other levels manually. This is market profile. This is the ES micro and the ES mini. Volume is about right for typical now based on well, a little bit light actually still. And let's see what the ATR's gotten down to. Let's see, we were up here at 10 on the release, and now we're down here. And we're at about 67, 68% average volume for this time of day. What else here? Oh, okay. So the all-important news stuff is here. I have used investing.com for years, and I like the presentation here for snapping and putting in text or, you know, Discord or wherever. You can filter it any way you want to, including country, time zone, what reports, how many, you know, stars you want, all that kind of thing. And let me emphasize, it's free. So both of these sources are free. You can pay for them if you want to. It has some nice features. Here's what's going to happen tomorrow. Here's what's going to happen next week. Well, there's what's going to happen next week. Well, look at Tuesday. Holy shit. Tuesday's a biggie. Well, you can also see earnings. And today was Oracle was coming out after the bell. I think, right there. So that is investing.com. Again, it's free. The other source I use is Financial Juice. I don't like the presentation of it for screen snapping much because it's this. However, it's got some things that are good. Investing.com only reports accurately and dependably known, scheduled financial or data, and monetary data points, non-farm payroll, PPI, all that stuff. Fed meeting, just like today. Financial Juice, similar, but they also add, when applicable, this kind of thing, what you're never going to see in investing.com. Trump's going to participate in a roundtable. Trump's going to greet pastors. Okay? Those don't ever come into InvestorRT investing.com. And they can be, in this current environment we're in, I call these unknown critical risk, because you never know what might happen to the market when there's an opportunity for them to speak in front of a mic or a camera. Any of them, anybody back there. The ridiculous shit. Oh man, interest rate cut should have been doubled. This is the guy that's gone bankrupt 13 times. Be sure you remember that. Including a casino. I think it's got to be a first, I think. I don't know. Anyway, this is more of a squawk box feel, and this is where we're going to see the market on close imbalance over here. So there you go. And that takes us back to Bookmap. Here we are. Here's Blue Boy, my teammate there that I put on. This is a real secret indicator here. It's a vertical line. And I just slap that guy on the first print of each session. You can see back as far as you want to go. Multiple sessions. There's the overnight. Here's today. Here's yesterday, RTH, and on and on. And the only reason I do that is so that I can just glance to my left and know that I have the full session in view for context. Okay? If I go like this, I know that this is the full context of the day. If I'm all zoomed in over here, what happened? What did we do today? Do you know? Me too. So that's why the new method is this. This is also where I, in case you don't know, this is the DOM or the price ladder or the order book. These are resting liquidity. Orders, resting orders. This is the micro composite column here, which is where I manually enter this stuff, and this is my workflow for levels that have been revisited. I change the text to black, like that. Full session volume profile, right here. RTH session volume profile here. The full session starts plotting at 1700 last night and will continue through 1600 today. This RTH column reset at 8:30. This is the notes column where I put my statistics and things, starting with the changing the title of the column every day to the opening type to do with regard to the statistics, and then the statistics associated, by their associated price levels. This is the session prices, which I start pushing 1700 on Sunday evening, continuously through 1600 on Friday. And if you would like that data, like, subscribe, and drop something in the chat, and I'm happy to share it. It's a Google CSV. The heat map, obviously, these gradations represent the liquidity that's resting over here. No indicators on my book map or my IRT. There is a mid. There's an RTH VWAP, Globex VWAP, and 2 POCs. One for the full session and one for the RTH. POC is just the price at which the most contracts have traded so far in the session. Nothing more. VWAP is volume weighted average price. And there's an IB high and an IB low, which sometimes seem to confuse folks. All these two prices, it's because of the naming, initial balance high. Well, what's that mean? It's a market profile thing. This line, this level right here, this flag represents the high of the first 1 hour of the RTH trading session today. And this one represents the low of the first 1 hour of the RTH trading session. We have never come back down and revisited the low. Period. Simple. Nothing I do is mysterious or magic or very complicated. I don't think those things help you trade. If you have a checklist with 15 tick box items before you enter a trade, I'm pretty sure that you're going to get analysis paralysis and not miss half the trades. Your human mind can't deal with that. It's scientific, psychologically proven. We're only good for maybe 4 or 5 criteria, and then it just starts kind of falling over and defaulting to the most common thing. So there you have it. And we're going to have the market on close imbalance at about 8 minutes or 7. And then the stream ends at 1500 every evening. And every trading day, I start the stream with the pre-market and everything at 8 o'clock Central Standard Time. So there you go. Like and subscribe is a big help because I'm not monetized in any way with YouTube, so it's nice feedback. There you go.